struggling at the moment, with surveys recording the smallest increase in new orders seen since the financial crisis 6 years ago, depression, amidst the weakest U.S. and global economic growth and the strong U.S. dollar. That has not helped there. However, the survey also found that companies remain in hiring mode, pointing to another robust non-farm payroll gain in January. At the same time, cost pressures hit a post-crisis low due to, again, petroleum prices, the route which should pave the way for further fall in headline inflation in the coming months. Irrespective of employment gains, the combination of lower inflation and lower economic growth suggests that any lifting of interest rates before the mid-year is looking increasingly unlikely. That'll be a very interesting prospect there. Interest rates in the U.S., will they go up? Will they stay down? We'll leave the market now and their PMIs, and we'll move very, very quickly to Reuters. And of all things, we'll do Radio Shack here. Effectively what's happened, Radio Shack has declared bankruptcy, not a macro issue as such, but one we bring up here. Deal to sell 2,400 of its stores to an affiliate hedge fund, General Standards, its lender and largest stockholder. The wireless company Sprint will take over 1,750 of these stores on agreement with General Standard. Radio Shack's bankruptcy has been expected. Of course, Radio Shack has had problems for a very, very long time. The Standard General affiliate, General Wireless, will acquire between 1,500 and 2,400 of its 4,100 stores. And Sprint will, of course, move into some of their stores. They're well placed in terms of placement, so this is a boom for Sprint. Radio Shack has had troubles. I can recall many, many years ago, we bought radio pots for them, electronic pots for hobbyists were there, and other sorts of things. I remember the Trash 80s for those that go back to that particular IBM clone that is long since. In fact, they had one of the first little portable, I think it was the T100. Journalists used it. It had very little memory in it. I think you could do 3 or 4 pages. They used at White House press conference. A little bit of history thrown in there. It's 95 years old, a mail order outfit, and then of course went in there, so it goes back beyond our time, 95 years ago. Excuse me. But it's been around a long time, and it's just, the reason we brought this up was the continual adjustment of the retail sector in the U.S. Radio Shack, much of its bite has been taken out by other retailers. Specifically, much of the electronic pots are now available from other retailers on, say, the Amazons or various other places across the internet. That hurt in terms of that type of traffic, and they're more specialized pots. A lot of that buying is not as much now from the hobbyists, and some of this information, some of this product can be obtained other places. I was looking at the Raspberry Pi. It's available now from other retailers and more specialized electronic retailers, or what they call niche retailing. So that really hurt Radio Shack. And another situation also was the appliances that they sold, TVs, etc. At one time they even sold computers. That market has been completely cannibalized. And they were selling mobile phones, various types of mobile phones, plans, prepaid plans. There are a dozen retailers doing that now, and that further commoditize that, and you can see the move by Sprint. Nonetheless, let's get we'll do oil, then we'll go to the latest figures from the Bureau of here. Nonetheless, rose $1 on Friday, continuing to rebound as crude oil prices. Crude oil prices closed 4% higher on Thursday, as conflict in producer Libya and expected boost of oil demand following China's central bank easing helped the rebound there. Benchmark crude futures were 40 cents higher. That's at $56.98. That was on Thursday, closing up $2.41. This we don't really like to see. We'd like for those prices to go lower. And according to what's this National Australian Bank analyst here, Mr. Liu, there are signs of rejuvenation in short-term physical demand, although not sufficient to make meaningful dent in supply overhang. And you'll hear that word continuously out there. The move is viewed as an attempt to maintain market share in key markets by offering competitive prices, no doubt about that. The oil prices fell by 1/3 to $50 a barrel. That's following OPEC. OPEC is obviously working on getting those things done. So oil pricing, as you saw from the PMI in Germany and various other places, has been a key to getting consumers back in terms of discretionary income back into the buying habit there. The problem there is there's just not enough discretionary income in these economies. Therefore, we constantly see a makeup going on here. Let me just get this up. It's the Department of Commerce here, Bureau of Economic Analysis. We'll get their data up here to bring the U.S. picture in here. This is dated, let me make sure what's going on here. The Bureau, Census Bureau and U.S. Bureau of Economic Analysis. Through the Department of Commerce announced today that goods and services deficit was $46.6 billion in September, up from $6.8 billion, up $6.8 billion from $39.8 billion in November. Revised exports, this is exports, $194.6 billion, down $105 billion from November. December imports were at $241.4 billion, up 5.3 billion from November. December increase to goods and services deficit reflects an increase in goods deficit of $6.9 billion to $66 billion, an increase in service surplus of $110 billion to $19.5 billion. For 2004, goods and services deficit was $505 billion, up $28.7 billion, or 6% from 2013. Exports were at $2,345.4 billion, up 65.2 billion, or 2.9%. Imports were $2,085 billion, up 93 billion, or 3.4%. Goods and services 3-month moving average of goods and services deficit increased 1.1 billion, up to 42 billion for 3 months ending in December. Average exports of goods and services decreased 0.2 billion to 196.6 billion in December. Average imports of goods and services did I say decrease? Yeah. Increased 0.9 billion to 239.4 billion in December. Over year, the average of goods and services deficit increased 5.2 billion for 3 months ending in December of 2013. The average export of goods and services increased 2.7 billion for December of 13, and the average import of goods and services increased 8 billion from December of 2013. Exports of goods decreased 2.5 billion to 134.3 billion in December. Exports of goods on census basis decreased 2.1 billion. Industrial supplies and materials decreased 3.1 billion. Non-monetary gold decreased to 1.2 billion. Other petroleum products decreased 0.6 billion. Net balance of payment adjustment decreased 0.4 billion. Exports of services increased 1 billion to 60.6 billion in December. The increase mostly reflected increase in transportation, 0.4 billion, which include freight and port services, and passenger fares. In financial services, 0.3 billion, and travel of all purpose, including education, 0.2 billion. Imports of goods increased to 4.4 billion to 200.3 billion in December. Imports of goods on census basis increased to 4.4%. Crude oil increased 1.1 billion. Other petroleum products increased 0.5 billion. Net balance of payment adjustment decreased less than 0.1 billion. Import of services increased 0.9 billion to 400.2 billion in December. The increase mostly reflected an increase in transportation, 0.5 billion, and in travel, all purpose including education, 0.3 billion. The real good deficit increased 6 billion to 54.7 billion in December. Real export of goods decreased less than 0.1 billion to 123.3 billion. Import of goods increased 6 billion to 778 billion. And some revisions here, won't go into all this. Revisions to November exports 0.1 billion upward. Exports of services were revised downward less than 0.1 billion. And the annual summary for 2014, goods and services deficit was 505 billion, up 228.7 from 476.4 billion in 2013. Exports were 2,345.4 billion in 2014, up 65.2 billion from 2013. Imports were 2,085.5 billion in 2014, up 93.9 billion from 2013, a better year there. The 2014 increase in goods and services deficit reflected an increase in goods and service deficit of 35.2 billion, or 5%, to 736.8 billion, an increase in service surplus of 6.5 billion, or 2.9%, to 231.8 billion. As a percent of U.S. gross domestic product, the goods and services deficit was 2.9% in 2014, up from 2.8% in 2013. And let's see, we won't go into everything here. The deficit with China increased 23.9 billion to 342.6 billion in 2014. Exports increased 200 2.3 billion to 100 and